Great. Well, thank you to everyone who's signed up, and we will be publishing this June monthly outlook onto all of our social channels. So you can find it on YouTube, on Facebook, and on Twitter. And we're very excited for the presentation today. We've entitled it Bitcoin History Doesn't Repeat, but It Often Rhymes. This is a sort of an adage to a really wonderful quote by Mark Twain, and honoring him and some lessons through time. We're here today. We're going to be giving sort of an overview of what the company's been working on over here at blockchain.com, and we're going to have Dr. Garrick Heilman talking about some on-chain metrics and giving us a little history lesson. But really the highlight of today will be to introduce Dr. Muneeb Ali, who's a co-founder of Stacks, to give us an update on the incredible work they've been doing with the developer community there. So we're really looking forward to that. So without further ado, welcome to the blockchain.com podcast. This is Nicholas Carey. I'm the co-founder of blockchain.com, the founding commissioner for the Blockchain Commission for Sustainable Development, and the co-author of The Future is Decentralized. So a little bit about blockchain.com. We've been working really hard over the last few years to build software that makes it easier for all people in the world to be able to send, receive, secure, trade, and exchange digital forms of wealth. So we're mostly known for our wallet software. You can download it for free from the iOS or Android store, or sign up online. We also have a professional trading feature called the blockchain.com exchange, where you can trade at high volume if you're a little bit more of an advanced user. The blockchain.com Explorer is still one of the most popular websites to look at what's happening on chain and get a sense for how much activity there really is happening in this digital economy. We offer a variety of other features, including the ability to buy your first crypto, exchange it or trade it for different digital assets. We have a very popular interest feature where you can deposit crypto with us, and our lending desk will offer competitive rates to return interest to you, and we're far exceeding the type of rates you could get in a bank account today. And then finally, for the nerds and developers out there, we have a whole bunch of published APIs that are available for you to build on top of the blockchain.com platform. So it's been a busy month. We have finally launched Segwit. This was one of the most asked questions for our team was, when is Segwit shipping? So really proud of the team's work on that, and thank the community for their patience while we worked on releasing that. We've got an exciting chart to show you in a little bit about what that means. But for those of you that aren't aware, Segwit was a modification on a technical level that actually increases the amount of capacity that the network has on any given moment. So we've seen a reduction in the memory pool. It's supposed to make it faster for transactions to confirm and reduce the cost of transactions on the Bitcoin network. So very pleased to be bringing that to the crypto community in general. We've made some real improvements to the speed at which transfers can be made into and out of the exchange and wallet for USD Euro and Great British Pounds. Due to very popular demand and the army of Doge worshippers out there, we have launched support for Dogecoin, a meme coin that is available now on the blockchain.com exchange. So if you've been following that community, you can now support it via the exchange. A simple swap experience is now live in the wallet. We have Bitcoin Cash and Stellar available as assets that you can deposit to earn interest with. The simple buy widget on the blockchain.com Explorer is a quick way to get access to your first crypto. We've launched the interest feature on Android and made some improvements basically across all the trading features and the blockchain.com experience. So without further ado, if you haven't already recently updated your iOS or Android apps, all those features require an update, so make sure you stay current with that. We've also made some nice changes to the exchange, which you'll see on the next slide as well. And then interest rates, these are the published interest rates that you can earn by depositing the minimum amount of crypto into the interest feature of your blockchain.com wallet. So a great way to kind of earn some stable coins if you want to. Finally, yeah, as I was talking about those new rails for the exchange, this is an updated screenshot of the user experience there. We're obviously working always to listen to the community and add features that are relevant and hopefully make that thing a little more durable. One of the things we've been focused on is preparing for some exciting new mobile capabilities for the exchange. It's been a huge priority for us because we know how many people are working from their phones these days. So stay tuned on that, but it's coming soon. Whew, almost out of breath. And if you didn't hear it, last week there was a huge conference, sort of the first reemergence of the crypto community coming together in Miami. And it was one of the largest ones maybe ever. Over 25,000 people descended on the city. Mayor Suarez invited and hosted a whole bunch of companies, and blockchain.com was one of those to announce that we are going to be forming our new US-based headquarters in Miami over the next couple of years, adding dozens or hundreds of jobs and bringing millions of dollars to the economy there. So we're really pleased to be welcomed so nicely into the Miami community. And if you live in the area, definitely check out the blockchain.com's careers page. We have a bunch of open roles and we're looking to fill those. So one last thing on that Segwit change, for those of you that are hardcore into crypto, you'll notice a slightly new and updated address format for your wallet addresses. And if you want to see the real impact that this feature release has had, we go to the next slide. You can actually see the percentage adoption that has occurred since we rolled it out to our entire community. And the blockchain.com user base is a worldwide one. There are millions and millions of active users on it on a daily basis. And that change is now very obvious. The number of Bitcoin transactions that are being signed with a Segwit wallet has dramatically increased. And so we're really pleased to see the adoption of that and the immediate impact it's having on the network, both from the health of the memory pool and then generally space that is available for transacting. So, all right. Last month, we covered what was going on in the market, some on-chain analysis, and we had a special guest, Aaron Wright, the clinical professor of law at the Cardozo Law School and the co-founder of Open Law. So we're doing some really interesting work on the legal side of defending and protecting smart contracts, privacy and currency generally. So if you didn't catch that one, please go back and visit it. Super interesting discussion about the future of money and the intersection between law and governance and money. This month, today's focus will be not too dissimilar. We've got a market outlook brought to you by Dr. Garrett Kyleman and the blockchain archaeologists at blockchain.com, who have pulled some summary information about what's been going on the last month. And we're very excited to have Dr. Muneeb Ali, the founder of Stacks here, to be joining us. So stay tuned. We're going to kind of get through the on-chain analysis and a quick history lesson about how Bitcoin rhymes. I'll be passing it along here shortly to my colleague, Dr. Garrett Kyleman. So for this market outlook, please welcome Dr. Garrett Kyleman. He's the head of research here at blockchain.com and one of the world's most cited cryptocurrency and blockchain technology researchers. He created and taught the first UK class on blockchain technology at the University of Cambridge. He's authored a bunch of leading research on cryptocurrencies, including some of the foundational work on stable coins, which is now being really referenced quite a bit, and generally trends in the crypto space. He's been ranked as one of the 100 most influential economists of our time and is regularly asked to speak on CNBC and NPR and all the other news outlets. We're very lucky to have him today. Thank you very much, Dr. Garrett Kyleman.
Great, thanks, Nick. So we're going to move pretty quickly here through the market section and on-chain section so we can get to the conversation with Muneeb. It's no secret, I think, to anyone on this call that crypto plunged last month. Bitcoin down a whopping 36% for the month. Ethereum down a significant lesser 8%. But I think it's interesting to look at what's happened with gold. Gold had its actual best month since July of last year, up 8%. I think it was up around 11% in July of last year. Had been drifting down. And you might ask yourself, what's going on there? Well, really, the main macro theme that has driven a lot of people into crypto, into assets like Bitcoin, hedge fund managers like Stanley Druckenmiller, Paul Tudor Jones, is this hard asset investment thesis. We're still seeing, a massive increase in the money supply. We're seeing some inflation data starting to come in quite hot, and this is really kind of the thing you need to keep in mind during these turbulent market times. And you're thinking about, is crypto still got a bright future in front of it? I think unequivocally the answer is absolutely yes. The macro picture is very supportive for Bitcoin in particular, but crypto as a whole. That has not changed. The data is coming in and really verifying that thesis. And if you want to hear more about that, I would point you to a conversation we had with our head of markets, Charlie McGarrick, last week. It's on our podcast, where Charlie makes the case that the bull market is still intact and kind of goes through the reasoning behind that. Charlie's a former metals trader actually at Goldman Sachs and has been with us for a couple of years. So check out that podcast if you're interested in digging more into kind of the current investment thesis and where we're at in the cycle. And just as Nick referenced, the historical reference and theme for this month is it's always helpful to go back and look at history. We think it doesn't often repeat, but it sometimes rhymes. We've got a really exciting podcast coming up later this week with my PhD supervisor, Neil Ferguson, the great financial historian. So I wanted to preview that as well. But looking back at some prior cycles, and you may ask yourself, well, where does Bitcoin go from here? Well, when we go back all the way to 2013, you can look at the chart and see, wow, there was this really big uptick in the spring, in the March-April timeframe when Cyprus announced its deposit tax, and we saw Bitcoin's price zoom well beyond the $200 level back then, and then more than sell off by over 50%. I think it dropped into the summer around $75 roughly, before having a massive run up to over 1,000. And so you can see in Bitcoin's history, sell-offs like the one we've currently seen setting up a much bigger move. In 2017, we saw a number of very significant sell-offs. I think around this time in 2017, July, we saw 40% sell-off roughly before the massive spike to close to $20,000. So it's not unprecedented for Bitcoin to have a big correction kind of mid-cycle. And I think that's an important detail to keep in mind. Some things don't change though, as we're also fond of remembering. And one of those is the China bans Bitcoin theme. This has been attempted or announced in various shapes and form for years now, going back to 2013. You know, it's like every year this comes up. You know, maybe this time is slightly different. But you know, I'm a little skeptical about how far China is going to try to push this, frankly, because trying to eliminate Bitcoin ownership, and they haven't even announced they're even attempting that, but if they were to try to do that, they'd have to go after millions of Chinese who could be holding this in non-custodial wallets. And that's gonna be a really tricky thing to do. And the regime really risks, I think, appearing quite impotent if they're unable to successfully implement such a policy. And I think it would be a really challenging policy to implement. Having said that, we are closely monitoring what's going on with Chinese mining and the liquidity crackdown. So it's an issue, and I think that's a big thing that's hanging over the markets currently. But if you're a medium-term investor who's dollar cost averaging in, not getting leveraged and risking getting, you know, kind of stopped out of a position, I think this is a great time, frankly, to be building and accumulating. And we'll see in the on-chain metrics that, look, you know, numbers are down, and this arguably looks bearish. But historically, when transactions have dropped, you know, it's a great time to buy. The last time we saw payments back at current levels was in 2020. Great time to accumulate if you're again a medium to longer term holder looking at a 2 to 3 year and out time horizon. So you know, I'm not going to sit here and pound the table and tell you the price can't go lower. It certainly can, but we think this is a good time to be continuing to build a position in Bitcoin, especially. So with that, let me turn now to our chat here with Muneeb Ali, the co-founder of Stacks. I'm going to stop sharing my screen so we can see everyone here. Hello, Muneeb. Welcome to the podcast.
Thanks for having me.
Yeah, so those that don't know, Dr. Muneeb is a co-founder of Stacks. Stacks has raised a whole bunch of money from some amazing investors, including Union Square Ventures, Y Combinator, the Winklevoss twins, and many more. He's been featured on all kinds of press and media, and received his PhD and master's in computer science from Princeton University. His thesis actually has been nominated for the ACM SIGCOMM Dissertation Award by Princeton University and is regularly cited by researchers like Garrick and other fans of his work. So we're very glad to have you on with us today. We have a little tradition here, Muneeb. We always like to ask our guests how they earn their first buck. And as a little icebreaker to get a sense for how you started off your life as an entrepreneur, what was your story and how did you earn your first buck?
Yeah, so I think my first buck was a research job that I got. So growing up in Pakistan, I tried hard getting into arguably the only university where you could do research work in computer science back in the country. And over there, like I was basically like a mini researcher in a lab, and that's where I got my first paycheck.
Nice. We've ended up finding up with so many people that were like farmers or lemonade stands. That was like very nice job. I love it. All right, Garrett, why don't you go ahead and take the first question here?
Sure. Yeah. So I as Nick mentioned, I've been a big fan of what you guys have been building and also what you've been communicating about the power of cryptocurrency and blockchain. And one of my favorite quotes is your contrasting Google's famous "Don't be evil" because Google has so much power and has to remind themselves not to abuse that power with kind of the promise of blockchain in a can't be evil world. And I just wanted to ask you about where we stand really in that kind of evolution to a can't be evil world, and maybe a little bit more about the history of that quote.
Yeah, so I think I do get a lot of credit for the can't be evil code, mostly because I think I used it in a TEDx talk, or we had this billboard right outside of Google's Mountain View office, and I think that one really hit a nail, and I think a lot of people are talking about it because it was like such a reminder to people who actually work at Google that, look, the company you work for doesn't even stand for this thing anymore. They even removed "Don't be evil" from their company handbook completely, right? Because they couldn't really kind of like stand behind those values. But I do think it's a really good summary. If I remember correctly, I think I've noticed people use this line and similar lines online by I think it was a bunch of like blockchain folks who started it. I think it might have been their funding announcement actually. Back in the day, and there was a sentence about the can't be evil that really stuck out. So yeah, I end up getting credit for that, but the history I think goes back, and I'm pretty sure if you talk to the blockchain people, they might point to like something else like before in history where somebody has used a similar sentence and so on. But interestingly, I do think that it's a really good way to capture fundamentally what is the difference that we're talking about, like between Web 2.0 and Web 3.0. Web 2.0 was really about we have these large cloud services now that we almost like blindly trust, and we're saying that, okay, I can just blindly trust these services and they can have access to all my data, and it's, oh my god, it's so convenient and it's amazing, and let's just do that. And I think over the last decade or so, we have started kind of like seeing the negative impacts of that. Like anyone who has felt strange about how is like Instagram or Facebook showing them such relevant ads, like relevant to the extent of being creepy, that you were having a conversation about something, or you had a guest over who was searching for something on their device, and suddenly you start seeing similar searches there. Like that's kind of like the ugly underbelly of the fact that all of our lives, all of our data, it's actually being controlled by these decentralized cloud providers. And with crypto, people are really imagining a new type of a world where people are more in control. So one of the things that happens when you cut out the middleman from the picture is you're actually giving more power to the people. And it's such a powerful concept. Like starts with Bitcoin, where you can own sovereign money directly with your own keys and your own wallets. And I actually think that the work that blockchain.com has done is super interesting there. Like I feel like it was one of the early wallets that made the decision that we are actually going to let the users actually own the keys instead of being custodial. And I think that was a very fundamental decision that you guys took, and I think you should be applauded for that, because that gave the industry that option of like actually owning their own keys, and then still showing that you can get millions of users actually using crypto the right way, meaning that they are in control of their assets directly.
Yeah, cool. It's funny. In the crypto space, it's like the corollary to not being evil was like building centralized services on a system that's entire purpose was to decentralize things. And it was like the temptation to do that was obvious because of the surveillance technology and the ability to understand user behavior and that control. But it's always been something uncomfortable for me, and something I've observed as a hypocritical component to some of the more successful centralized platforms in crypto. So it's an important concept we all try and convey here, which is to always remember that if it's not your keys, it's not your crypto, and you're just letting somebody else manage it for you. And that might be okay, but there's also a significant risk profile that comes along with that. So thank you for reminding us about it. Yeah, sorry, go ahead, Garrick. I just wanted to chime in on that.
No, I was happy. I'm glad you jumped in there. Yeah. No, I would love to talk next, Muneeb, about DeFi. We spent a lot of the last year talking about DeFi. It's one of the kind of killer use cases of blockchain technology beyond kind of the digital gold thesis, and wanted to ask you about DeFi on Bitcoin, DeFi using stacks. Number one, is that even possible? My understanding is yes, of course it is. And then why would you want to do this using Stacks and Bitcoin versus say Ethereum and some of the other popular DeFi platforms?
Yeah, no, I think it's a great question, and in some ways, like this has been the holy grail in crypto. Like, how can you actually have these new types of use cases directly around Bitcoin? Like, you can go all the way back to like 2011 or so, where Satoshi himself was involved with the discussions around BitDNS and Namecoin, right? And that was super interesting because it was both the starting of NFTs in a way, because a domain name is a non-fungible token, and it's the starting of like new types of use cases that, okay, Bitcoin doesn't support this, but you want to do it around Bitcoin. Should we modify Bitcoin, or should we start a separate blockchain, or should we somehow try to reuse the compute power of Bitcoin? And if you think about it, imagine like how tribal crypto can become, and if you are like a fan of Ethereum versus you're a Bitcoin holder or a new project, right? Like there are some very interesting new smart contract platforms as well, and these arguments become really religious. But if you think about it, like those design decisions, like should you do this on Bitcoin by modifying it? Should you start a completely separate system, or should you somehow try to reuse the power of Bitcoin? Like it's effectively the same design choices that people are making even today, and they're arguing about it, right? Like, no, this is better or that is better. So I think it's a very, very fundamental question. And it all basically boils down to, in some ways, like sharing the resources, or how to divide this tech stack into layers, right? So Bitcoin takes the position that the base layer needs to be kind of like very durable, very secure. There isn't a lot of like expressive programming languages there. Bitcoin script is like very, very type of a minimal type of a scripting language, and many opcodes are even disabled in the script language for a reason, right? You want the attack vector at the base layer to be very, very minimal, right? And Vitalik even tried introducing more kind of like, expressive smart contracts at the Bitcoin layer, and then went off and started Ethereum. And interestingly, on the Bitcoin side, people have been trying to do interesting things on top of Bitcoin, right? Like Counterparty comes to mind, or Mastercoin. People were actually literally creating NFTs on top of Bitcoin, or creating new types of financial assets through techniques like colored coins. They would actually, mark certain coins as colored, and they actually have some different value, and so on. There has been the Omni layer on top of Bitcoin that would actually do stable coin type transactions. So these things have always been possible. I think like because 10 years have passed, and there's almost like a new generation of people who have entered crypto, and for them, Ethereum is kind of like the place where it's the default go-to place to go to if you want more expressive smart contracts. And I think Ethereum deserves a lot of credit that they, in a way, went the other extreme. They basically said that let's just insert like full Turing complete smart contracts at the base layer, right? And the dangers of that are that, like we can get into the security of smart contract programming languages, but Turing complete are effectively the most extreme position you can take, that you can write anything you want. That's very powerful, but at the same time, it comes with certain increased attack surface for your smart contracts. And that's why we see, all these different exploits or reentrancy attacks and this and that, and these things are happening. But I do think that the developers and programmers kind of like really got attracted to the expressiveness, to the power of the platform, that hey, I can actually literally just program anything at the blockchain level, and then we can deal with the consequences there. And I think in all that type of like evolution, people kind of like forgot that there's nothing fundamental going on here, right? Like Ethereum is a blockchain and Bitcoin is a blockchain. Bitcoin took the decision to have the base layer simple, but you can add other layers. Just like these days now, people are looking at like L2s or other types of solutions on top of Ethereum to achieve scalability or other types of functionality. The same thing can happen with Bitcoin. And this is what kind of like Stacks has done. Like our view is that it's actually beneficial to separate out the money layer that needs to be durable and simple from the smart contract layer, where smart contract layer could be more experimental. And the problem that we've been trying to crack is, how can you reuse Bitcoin's hash power, and how can you directly deploy Bitcoin's capital directly into smart contracts? And I think that's in some ways, like, that's the holy grail. Like, if you could do it on Bitcoin directly without causing kind of like scalability issues for the base layer, or without kind of like modifying the base layer to introduce basically security attack vectors by having a more expressive smart contract language, then that's the holy grail. And I think that's the work we've been doing for the last 3-4 years, where we designed a new smart contract programming language. It's called Clarity. So Clarity, I think it's worth discussing a little bit, because it is very expressive. You can almost write anything you want to write, but we're not going all the way to a Turing complete language. There's this concept of a decidable language. You can think of that as almost like a subset of a Turing complete language. There are certain things that are not allowed, but it's very expressive. You can pretty much write anything you want. People are already building automated market makers, or liquidity protocols, or NFT platforms, and things like that. But it gives you a very interesting set of security properties that you can reason about what this program can and cannot do even before executing it. And that's a night and day difference, right? So I would love to analyze my program, that what will happen once this smart contract executes, without actually taking the risk of actually executing it, because you're keeping people's money on the smart contract, and this could be like hundreds of millions of dollars, and you should be able to almost like have bulletproof code, like the type of code that runs on airplanes. Like you can't like experiment mid-flight that, hey, when this piece of code executes, like what's going to happen. You really should be able to give mathematical proofs of those things. So one work that we are very proud of is the language itself, and it's gaining even traction outside of Stacks. Algorand is one of the projects that actually adopted the language so they have a different approach. They allow a bunch of different languages to run on the Algorand blockchain, and they adopted Clarity as one of the languages that is more expressive and very secure. And I would love to see it gain more traction as well, because it's a language. It can run on other types of systems as well. When you run it on Stacks, though, the language has additional properties, because the way the Stacks blockchain works is it has full visibility into Bitcoin state. So if there's a Bitcoin transaction, that can actually trigger logic in the Clarity contract, which is very powerful, right? So now I can basically make a pure Bitcoin transaction and change the state of a smart contract, or the other way around, where the smart contract can actually trigger changes on the Bitcoin side. And again, that's the holy grail. Like, if you could have a smart contract that could start directing logic on the Bitcoin chain, then that's extremely powerful. And I think that's the way we have designed Stacks. And conceptually, I think it's a little bit of a mind bender, right? Like, a lot of people do get confused about, hey, what have you exactly done? So you have extended Bitcoin in a way without actually modifying it. And it sounds like a paradox, that because we didn't change anything in Bitcoin, we brought in this layer. And the way we were able to do that, I think the breakthrough was when we figured out basically consensus between two blockchains. So most of the blockchains have consensus within a single system. And this consensus is between the Bitcoin blockchain and the Stacks blockchain. So it's like two L1 blockchains, where Bitcoin is kind of like the leader and Stacks is the follower. And they connect to each other at the consensus layer. And that opens up a lot of really interesting possibilities.
Awesome. There's so much I'd love to follow up on there. A lot of interesting nuggets. Maybe just on Clarity and the programming language. One of the things that you'll hear from developers is, oh, I've got to go off and learn a new language. This is friction or a barrier to entry. Can you talk about that aspect of developer recruitment and community building, and like what Solana, is gaining by using Rust versus, Ethereum Solidity, and the need to learn a new programming language there as well, even if it resembles JavaScript, that whole dimension to kind of building community and attracting developers and applications?
Yes. So I completely agree that I think learning a new programming language, there's a learning curve there, and it could be challenging for folks. But when we were thinking about that, I think our thinking was that even Solidity, sure, it resembles JavaScript. Like you have to go through a learning curve there as well, because most of the learning curve is actually not so much about the syntax of the language. It's more about the new concepts around how smart contracts work, right? So that learning curve is present on both sides. If it's Solidity or if it's Clarity, or if it's a more traditional language like Rust, but now you're really deploying smart contracts with it. So you'll still have to understand like how are smart contracts different from normal programs, and what's the difference and how to program them, right? So the syntax obviously helps. Like syntax is a little bit like, but programmers can get used to it actually pretty quickly. So for the syntax, we ended up going for a Lisp style syntax, and sure, there are more programmers who know JavaScript than Lisp, but people who like programming that way, like they actually love it. And I think in our experience so far, developers very quickly get over the syntax side. Like, within a couple of days, like the syntax is kind of like in the background, because you're like, that's fine. The things that stand out are more about how we are fundamentally like viewing smart contracts in a different way. I can give you some examples. So one thing is that we actually don't publish compiled code at the blockchain layer. We publish the source code. And if you go to the explorer.stacks.co, you would actually see like literally the code published there. So when people say like code is law, it's very interesting that most of the time they don't even know what the law is, because it's compiled code. And from a security perspective, there's actually potential problems there, because there could be compiler bugs, and there could be unintended consequences that what the programmer wanted to write is not the actual thing. The actual thing that is running is the compiled code, right? So we basically sidestep that, again, for security reasons, that we don't have a compiler. And because of this decidability and predictability, Clarity contracts have very precise type of like execution and gas fees. So imagine like in Solidity, you would have a gas estimate. You don't know exactly how much gas is going to get consumed, because you don't know what the program is really going to do. And over here, once programmers get used to it, they're like, oh, that's great. I know precisely how much gas to specify here. And then there are interesting things like, post conditions, where you're saying, no matter what happens in this smart contract, if these conditions are basically not met, don't do anything, basically abort, right? So it's a little bit like, you could put safety checks around smart contracts, that I don't care about the logic of the contract. If more than 5 stacks are being withdrawn as a result, like just don't execute this thing, right? So those are features that developers are coming back and telling us that they really enjoy them, and a lot of thought has been put into a modern programming language that is almost like built for security. And security, like our entire stance is that the only thing that matters for smart contracts is security. Like nobody cares about how quickly they can execute. Nobody cares about like, how hard they might be to program, because when you're dealing with hundreds of millions of dollars of actual money, the only thing you care about is like how secure this piece of code is.
Mm-hmm. Great. Nick, happy to hand it back over to you, or keep going. What's your preference?
Yeah, I guess I'd love to hear like your view, Muneeb, on which applications are you most excited about that are sort of seeing some traction, and kind of give us like, a few examples of things that are sprouting from the community that seem to be getting adoption, and talk about those use cases, because I think it's helpful to crystallize them into stuff that's actually being used.
Yep. So I'll give you an example. So I think the first smart contract that was published when we launched. So the blockchain launched in January of 2021, this year, like mid-January. And then the first smart contract that went live was towards the end of January. And that contract is very interesting. It's called the POX contract. POX stands for proof of transfer. And you can lock up capital in the contract. And then people give their Bitcoin address in the smart contract, and they get a Bitcoin yield out of it. So it's actually like a pretty this smart contract is a little bit special because it plays a role in our consensus algorithm as well, where people are locking up capital and they're earning a yield, and the yield is actually coming from the mining process, right? So when we launched this, it was super interesting. But in my mind, it's a little bit of a example of a yield generating smart contract. Like you could lock up capital for some other type of application as well, and that is giving you a yield. And interestingly, we saw like, $100 million locked up, the 200, 300, 400, and at one point we touched $1 billion, and very quickly. And interestingly, the feeling that I had was, oh my God, we have like $1 billion locked up in a smart contract, and I can still sleep at night because we know it's written in clarity. And it's like there are mathematical proofs for what can happen in this smart contract and what cannot happen. Right. So that was like a good feeling to have, that I can actually like still sleep at night, even when there are $1 billion locked up in a smart contract. And then obviously the crypto prices fluctuated. And I think right now the number might be lower because the capital that's locked up is in cryptocurrency as well. It's not stable currency. So that's one example. I think one thing to highlight there is the yield that people are getting is actually pure Bitcoin transactions. So the smart contract is on the stack side, right? So think of stacks and Bitcoin as two layer ones. They connect with each other, and the stack's consensus knows about both sides, right? And so the logic on the stack side is triggering Bitcoin transactions. And I think more than 500 Bitcoin has been transferred through that contract so far. So people are earning like, direct Bitcoin yield. And the experience is magical, right? Because you could give any wallet, like you could give a blockchain.com wallet, and suddenly Bitcoin would just start appearing as Bitcoin transactions in that wallet. And people are like,
yeah,
this
so
is
how does
magical.
someone do this? If it sounds like I want to do this.
Well, and tell us about how the yield is being generated, because I mean, a lot of people who are newer to the space, they hear about yield and DeFi, and they're like, this sounds like some Utah savings and loan. They used to promise some ridiculous rate that then failed, and not going. So yeah, walk us behind the scenes a little bit too.
Yes, so I think to the how to question is actually simpler. Like you basically are locking up stacks, so you need access to stacks, and then you can do it directly from the wallet. So Hiro, my company, has built a wallet. You could go to hero.so/wallet, download it, and you can just directly lock up capital. And by the way, there are no slashing conditions. So your capital is actually not at risk of being slashed or anything like that. You're just locking it up for cycles. Every cycle is 2 weeks. And you can pick, how many cycles you want to lock it for, and you give a Bitcoin address. So it's very simple. There are delegation services as well that have popped up around the world where people are like, hey, if you don't meet the minimums, you can delegate to me. And interestingly, again, you can keep your money in a cold storage, and there's a delegate transaction. So the maximum a dishonest delegator can do is like steal your rewards for one cycle before you delegate to somebody else, but they can't do anything more than that. And in terms of like where the yield is coming from, interestingly, the way Stacks kind of benefits from Bitcoin security is the Stacks history. So think of that as like all transactions in a Stacks block, they settle on Bitcoin automatically. Right. And an analogy here would be that, imagine lightning channels that are being set up automatically because there are miners involved and miners are doing the work, and they're automatically settling those channels on Bitcoin all the time. Right. So Stacks has like faster blocks as well. They are called micro blocks, but then they all settle on a Bitcoin block. So there's a 1-to-1 ratio between a Stacks like full block and a Bitcoin block. And interestingly, to rewrite the history of Stacks, you would also have to rewrite history of Bitcoin. And I think that's where a lot of the security benefits come from. And to incentivize people to actually work on the Bitcoin side, our miners work on the Bitcoin side, right? So they are actually packaging these transactions, they're participating in consensus, and they're bidding in Bitcoin, right? So every block that's coming up, it's a little bit like Bitcoin miners have already done the proof of work to create a Bitcoin. Now we are using Bitcoin as almost like proof of computation, right? And people are bidding in using directly Bitcoin. So instead of spending electricity, you are actually spending Bitcoin to mine, right? So the amount of money that's coming on the table in a block, like it's the newly minted tokens plus the gas fees for the smart contracts, people are actively bidding on, I want to be a miner, I want to be a miner. But instead of, we could have just burned those Bitcoin, right? But instead of burning them, we are actually directing the Bitcoin to the folks in the POX contract. They earn it as a yield for locking up capital. And the people who are locking up capital, they're essentially indicating what is the right kind of like, right stacks chain to work on, because there's enough capital locked on the right chain.
So yeah, that's fascinating. I mean, it really contrasts with the other ways. I think people are more familiar with earning yield in crypto, where your crypto is being lent out. You've got counterparty risk and whatnot, and so this is really interesting. What has the yield kind of been roughly? What's the range been, and how volatile is that yield?
Yeah, I think people can go to stacking.club to take a look at the yield. I think the average has been around 10%, which is a pretty good number. And again, like I think over here in terms of risk, the real risk you're really taking is a STX BTC price pair risk. Otherwise, because your yield is in Bitcoin, but you're locking up stacks, like you cannot be slashed, and there's no middleman in the picture. It's not like you're giving your cryptocurrency to a third party and they might disappear because there's a counterparty risk there. There's no counterparty risk. So that's a very interesting primitive around which developers are building other things. Like now imagine, so this is where it starts getting really interesting. Now imagine that instead of, so there's a stable coin that's being launched, but the stable coin collateral could actually be earning the Bitcoin yield on top of the fees that the stablecoin is minting. So instead of now me directly locking up my stacks, I will lock it up in the smart contract where I can draw out a stablecoin. So I actually have access to liquidity while earning the yield or any fees on top of like the stablecoin contract, right? And so it's, or however you want to arrange it, like maybe there's a different structure, maybe there's the fee that I'm paying for the liquidity and so on, but maybe that's fine because I have the other yield that is offsetting it and so on. So people are, I think it's a very interesting primitive, and I'll very quickly talk about another application that is not live yet, but people are working on it. There are around 25 startups that are going through the Stacks accelerator, and a bunch of them are working on these different things. So one is a very interesting lending application that I think would be both the yield application I think is interesting from a blockchain.com perspective, but also the lending one. So in this lending application, your Bitcoin never leaves the Bitcoin chain, and your collateral, like your stable collateral, comes in as a Clarity contract. So the way you trigger a loan is you basically send a Bitcoin transaction, and which would trigger the loan in Bitcoin blocks. Right? And if the loan doesn't come back by the time the loan terms expire, which are expressed as a Clarity contract, then the contract would just release the collateral to you, right? So interestingly, now you're not going through a custodial service or converting Bitcoin into wrapped Bitcoin and then paying taxes on that. You're not trusting a separate blockchain. Your Bitcoin remains on the Bitcoin main chain, right? And you're trusting the Clarity contract, that the only thing you're trusting is this contract going to release funds to me if something goes bad and my Bitcoin doesn't come back. And I think that's where the security properties and the design are very interesting. So the Stacks chain actually forks with Bitcoin, right? Bitcoin is the source of truth. So you actually know that the Bitcoin state is always going to win. If Bitcoin says that the money didn't come back, there's no way that Stacks can say that the money actually came back, right? Because it follows Bitcoin's logic. And then Clarity is decidable, meaning that you can have a mathematical proof that is saying that if you don't get your Bitcoin back, you will get the collateral, right? So I think for people who are like very paranoid about, I don't want to lose my Bitcoin, and that's why I don't want to participate in lending, like it's applications like these that are like really trustless, and that can enable them to actually start using lending options.
Well, I think a significant percentage of our customer base here at blockchain.com is looking for the most trust minimized solution around non-custodial, and this sounds like a perfect fit there at a really attractive yield. We're probably going to lose some customers, Nick, here to Muneeb here, given if that yield persists. So I've got more questions, Nick. I don't want to completely hog the microphone, though. Are you happy?
No, I guess you triggered on something interesting there, Muneeb. For any entrepreneurs out there or developers that are interested in joining an accelerator like that, can you? How would they do that? Where would they need to go? Yeah.
Yeah, so I think one really interesting thing that happened was that so my company was doing a lot of the early R&D and infrastructure development, and then so Stacks 2 is kind of like our master design. This is the thing we've been working on for like 3-4 years. And when Stacks launched, we also very explicitly decentralized, right? So there are now 6-7 independent entities like that work on different aspects of the ecosystem. And the accelerator is one such thing, right? So they typically write like 30K to 50K type checks, very founder-friendly terms. People can go to stacks.ac to take a look. I think they just took in one cohort that around 25 startups are in there, and I think they're already be looking into the next cohort. And interestingly, people who are excited about building here, there's a very, very significant overlap with Bitcoiners, like people who believe in Bitcoin as sovereign money, people who are excited about, hey, I want to basically just extend Bitcoin functionality and bring smart contracts to it instead of like going to a completely new ecosystem, right? And that's kind of like the sweet spot. And I would say that, you know, it just feels like the market opportunity is really large. But even within the crypto industry, not a lot of people realize that, right? Like Stacks is trading at like roughly like $1 billion in market cap, but a lot of other smart contract platforms, I think they do have more project awareness and more people know about them and more people are kind of like talking about them. But I feel like smart contracts for Bitcoin is like such like an underappreciated thing right now. But to me, like it's like a no-brainer. Like if you could just do it on Bitcoin, like why would you go to any other blockchain?
And that'll come back to the original design around security that I think will be battle tested probably in a very intense way over the next few years.
I'll add one last thing, right? So one application that launched, it's a .btc domain. And I think that really came back full circle for me, right? Because this .btc domain system is written as a smart contract on the Stack side, but it benefits from the security of Bitcoin, right? So I got Muneeb.btc there. And literally, if somebody else wants to reclaim it, they would have to rewrite Stacks history, for which they will have to rewrite Bitcoin history. So it literally is kind of like powered by the power of Bitcoin's compute network. And that was the original design. Like if you go back to the Satoshi forums where they were talking about BitDNS, and they were then talking about Namecoin, and maybe Namecoin should be merge mined with Bitcoin, but you're only getting a subset of the security in that sense. And that was the problem, one of the problems with Namecoin, that you could never get enough Bitcoin miners to merge mine the Namecoin chain, right? But instead of starting a new blockchain and then modifying the Bitcoin code, this was literally 917 lines of Clarity code that implemented the smart contract that has all the functionality of Namecoin and plus more. And very quickly, a lot of people started kind of like getting their .btc domains on it, to the extent that there was a single developer who built a registrar, and I think I tweeted about it, and I think I crashed the registrar or something, and I think 4,000 or 5,000 people went through that. So the blockchain was fine, but the registrar that was kind of like processing, because we wanted to have USD payments and things like that, that got hammered, and the developer was up for like a couple of nights, but they were very excited about it to see so many people come in and use it.
Muneeb, I wanted to, of course, we promised we wouldn't ask you about all the regulatory innovation. You've talked about that elsewhere. Great podcast with Nick Carter on that topic. One of the things you mentioned on that podcast as well, and you've been very open about kind of how you see kind of the crypto wars and the competition between different chains and whatnot playing out, is this idea. I think I'm using your words here. There's gonna be a collapse back onto Bitcoin in essence, where a lot of the smart contract building and applications will kind of transition back to Bitcoin. And I'd love to hear more about your prophecy of a collapse back to Bitcoin, how you see that potentially playing out, why you see that. I mean, you've touched on that, of course, as well. Bitcoin's the most decentralized, has the best security, that is paramount. But do you have any views on how this could all manifest?
Yep. So I think one of the values we have as a project is kind of like long-term thinking, right? So all of the work we did with the SEC, at the end of the day, it was about having that same feeling that, hey, I can sleep at night, that regulators are not going to come in and go after this project because we did everything by the book. Like we went through the trouble, we went through all the overhead, the legal and accounting overhead, everything we had to do, because we don't want to be in a position like Telegram or like Ripple or like Cake or some other projects. And some of the projects that might think they're in the clear right now, they might not be a year from now or 2 years from now. Like you just don't know. And maybe you'll get away with it, maybe you wouldn't. But I just don't want to take the risk. Like I think the work that you're doing is so important that why take that unnecessary risk when you can just try to be as compliant as possible and even walk the path alone in a way, right? Like not a lot of people took that route, but we did. It came with the overhead, but it came with the long-term almost like protection that, you know, people can't come back and say you did an illegal securities offering or something like that, and then the project is in trouble because of it. And I think the same thing goes for the technical architecture and technical design as well. Like when you have a core value of long-term thinking, and you're thinking in terms of like, okay, I want to design a system, but I want the system to be alive like 10 years from now, 40 years from now, 50 years from now. I think it's a real issue that which blockchain is going to survive, right? And right now, you would look at the system and you'd be like, well, Bitcoin is going to survive, right? Maybe Ethereum will survive, but then I think they're very experimental, which is great. I think it brings a lot of kind of like, you know, innovation to the space, but Ethereum is trying to upgrade to like proof of stake, or ETH2 is a very different system. I don't know what this blockchain is going to look like 10 years from now, right? Like whereas Bitcoin is really trying to have that space in the design space where it's like, this thing is durable, this thing is reliable, this thing is designed to basically not change, right? Like obviously small types of improvements are there, like Taproot is coming and things like that, but these are not drastic changes. It's not like I'm going to throw away the consensus algorithm, I'm going to replace like this thing with something completely different. So if you're looking for those types of properties, like I mentioned, you know, the .btc domain, like if I'm buying a domain name, I want to know that this blockchain will be alive like 20 years from now on which this domain name is still valid, right? And same for like smart contracts. Like if I'm let's say I issue a stable coin and I'm doing a lot of settlements on the underlying blockchain, I want to make sure that this thing is going to be around 20 years from now and so on. So I think that was kind of like the main thing. And then more fundamentally, I think people don't think about the kind of competition you get into by starting a completely separate system, like all the tribal nature of, you know, Bitcoin versus Ethereum, or, you know, Ethereum versus Solana or Avalanche or something else. It's coming from because you're trying to create separate ecosystem. And I think that for consolidation to happen at some point, people would have to like stop competing at certain layers. So we are very explicitly saying that we don't want to compete with Bitcoin as sovereign money. We don't want to compete with Bitcoin at the proof of work layer. We actually want to connect to it. We want to use it. And our survival is dependent on the security of Bitcoin's proof of work. Our survival is dependent on Bitcoin winning as the sovereign money or the reserve cryptocurrency, right? So I think the alignment of incentives is also extremely important. If 10 other projects do that, that actually increases the chances that the center of gravity would kind of like remain with Bitcoin. And right now, frankly, I think there is a very real challenge that Bitcoin has with Ethereum, where can Ethereum become the center of gravity? Like there are memes around, you know, Ethereum being ultrasound money, and it's coming for the sovereign money use case. And we'll see these things play out like 5 years from now, 10 years from now, and so on. I think fundamentally am as a computer scientist more in the camp that I like the layered approach better, where you have a layer that is durable, simple, and it's just trying to be a store of value. And then you can have the layer that is more experimental, more expressive, and you have smart contracts there, right? And I think in the Ethereum case, you are basically like, there are two different types of things that you're trying to do at the same layer, and then it's adding a lot of complexity. And I just prefer the other approach a lot more. Right? Maybe it's because I was a Bitcoiner first, and you know, this is how I've evolved. But like I really view one design as being superior, which is actually the contrarian bet right now, right? Like if you talk to people, they'd be like, well, Ethereum is already, you know, getting so much traction on smart contracts, and you're spending all of your night and day working on something that people consider almost like a rock, right? And then my reply is, well, Bitcoin is not a rock; it's programmable, and you can actually do super interesting things with it. And it's a contrarian bet, but I feel like, at least to me, it actually feels like the right thing to do.
Well, just about everybody that's bet against Bitcoin in the last 10 years has ended up on the wrong side of that bet. So I'm not sure if it's actually that contrarian or not, but amazing work your team is doing and the entire Stacks community. So thank you for bringing that update to us. Garrett, do you have anything else you want to ask?
Well, yeah, we wanted to just give people real specific instructions on how they can get started, you know, using Stacks and some of the things you've talked about. Where do they go to learn more, to get started, to start putting this into action?
Yes. So I think the best resource is the website stacks.co, and it has all the developer documentation around how to write your first Clarity smart contract. And we're making it easier and easier to do that, right? Like, so how to publish a smart contract, how to get started. And then there are a lot of smart contracts that are already coming online as open source as well. So you can have these examples. You're actually getting the Lego blocks. This is the thing that I'm very excited about, that a lot of people talk about. Hey, Ethereum has these network effects, but the network effects are really a couple of really important Lego blocks. Like when you have things like a automated market maker like Uniswap, or you have a liquidity protocol like Aave. And once you get these Lego blocks, you can actually start programming against them, right? And so those Lego blocks are coming online in the coming months or so. So I think it's a very exciting time for a developer to really be part of kind of like the early days and actually try to program when the blockchain like only launched like 4 or 5 months ago, but it's anchored on the thing that has been around for more than a decade.
Awesome.
All right. Well, thank you so much, Muneeb and Garrick. So if you guys missed it, it was stacking.club, stacks.co, and then what else did we miss? Stacking.club, stacking.co, and then stacks.ac for the accelerator program for anyone interested in those things. So Muneeb, thank you so much. Congratulations on everything happening this year. And Garrick, appreciate all the insights on history repeating itself, but a little bit differently this time, as I suspect it will continue to do so. All right, have a great day, everyone. If for anyone that wants to revisit this, it'll be uploaded to YouTube, on Facebook, and on Twitter in the not too distant future. Thank you very much for joining us today. Cheers.
Awesome. Thanks for having me. This was fun.